What is happening, good people? I'm here with Jared Assface Dillian from Macro Dirt number 25. What's up, homie?
What's up, Twinkle Toes?
How are you today? All right.
Doing good.
You know what I love about you, JD?
What's that?
Nothing. Ah, got you. Oh man, Macro Dirt 25. We're gonna go right into the markets here. We're keeping it brief today. You and I just launched the Macro Dirt dual sub this morning, which we're really excited about. That's a product that was created out of client demand, and we're going to see how it goes today. I urge everybody to check it out if you do not subscribe to us. But let's go into the markets. We've got S&P 6081 after CPI comes in bang in line. Tell me your thoughts, Jared Dillian, please.
Yeah, it's this CPI number basically means the Fed's still cutting. That's all it means, right? It's the all clear. They're still cutting in December. What was interesting was the price action going into the number. Bonds were slowly grinding lower, like yesterday and the day before, and you could see that people were, de-risking ahead of the CPI, and bonds ripped after the CPI. So all this means is that we're cutting, and then we're kind of in new territory because we don't really know what's going to happen in 2025 after the inauguration, and I think everybody thinks the Fed's done cutting, so it'll be interesting to see.
Yeah, I think the one thing that stay on topic for me is the CPI number is just another bit of evidence that maybe the Fed hasn't committed a policy error. You know, maybe that's why treasuries like it. I think the lower rates are going to be, they're obviously being celebrated lightly by, the lower rate stuff like Bitcoin and gold miners. I think it's really relevant. I mean, that was a cupcake dip in gold. You and I flagged open interest backing off from, what was it, 600K
600,000 to 450,000,
to
yeah.
450. As we rally now, we're kind of chooching back up toward 500K. So it's kind of that positive reinforcement that, new longs are entering the building, and it recovered all three. Well, it didn't fall below all three, but it bounced off the 100-day, recovered the 50-day. And I mean, it's textbook bull market stuff. Would you agree?
Yeah, I would agree. I'm being a little bit more patient. I want to see new highs. I want to see new highs.
Yeah, we're going to get them.
But yeah, I mean, it kind of bounced right where it was supposed to, and party on.
Yeah, same thing. Silver's trying to get back above the moving averages as well. I still feel like that thing is dragging and a little
I should just have like a small core position in silver and just not look at it.
ever.
Just put a little bit on, don't look at it, and just wake me up in a couple of years when silver's at $100 an ounce.
Yeah, literally, because there's going to be so many fits and starts and so many pukes that you really don't want to like live through or watch, but you want to have the position on. I couldn't agree more. That's a good way to play it. So we'll see how it pans out, but it's holding trend when it has to, and so I guess that's what's most important. We have to flag. We saw some Icarus prints in some of those subsectors of technology, the ones that got out of the gate early October, just as Trump parted from Kamala on polymarket odds, right? And we had those ferocious breakouts in software, cloud storage, which is now the leading sector in the S&P on the year-to-date leaderboard. Internet stocks, cybersecurity, all on Monday, opened up at a new high, closed below the previous day's low. Now, the risk that you got to consider when that happens on a Monday is a potential outside week. Should this rally give way and they sort of, close below last week's low, that could be the top for these subsectors. And I think that these subsectors are really what's just responsible for the NASDAQ popping to a new high and the S&P kind of going along with it. So that's how I'm looking at the rotation. Do you see anything in the rotation jumping out at you, JD?
Yeah, I do see some stuff. So on Monday, momentum had a really bad day. Like momentum got killed. And crypto on the same day. Like momentum and crypto, like it all melted down. And I'm kind of keeping an eye on it. Like these I'm not really good at this kind of stuff. I'm more of a macro guy, but there's some people who really look at the internals of the market and like that. Look, I don't want to flag something that's going to turn out to be nothing, but that's the type of stuff I look for as maybe a warning sign that the internals are changing and things could be breaking down. So, um, and also the price action, like Friday, Monday, and Tuesday was pretty crappy.
Mm.
Just kind of grinding lower throughout the day, kind of picking up speed towards the afternoon. We got a bounce yesterday afternoon, and now we're up, 35 handles this morning on CPI. But the price action the last 3 days was really not that great. So
I would agree. And I would say that sort of with the weight of those tech reversals, alongside that, you've got semiconductors that are just holding their uptrend on the year. And I think that those are kind of in danger. You had, it looks like today we're going to see whether this is, that I saw the negative price action and in the selling that you saw this week. It wasn't really ferocious. We didn't reach a big low on the tick index. So there was no like agnostic puking across the board. But I guess my point was we will see how that shakes out if this becomes the counter trend rally that gets sold off by tomorrow's close or by Friday's close or not, or this is a recovery. So
yeah,
jury's kind of out. We're close to the highs. I mean, like I said this morning, when I just look at post CPI, yield curve doesn't move, rates reverting to the mean. It's just going to be green light go for the stock market if they want it to be. So we'll see. We'll see who wins
the other thing I want to point out is that I saw a chart. The chart was getting passed around everywhere. I think it was on Zero Hedge. It was a bunch of places. But the cost to insure a portfolio with 1 month at the money puts is the lowest in history, right? So if you're bullish, just buy some puts. The market goes up 300 handles. You don't care. It just, I mean, when insurance is cheap, you should buy it,
Yeah. Yeah, they're handing them out.
Yeah.
They're handing them out. So it's like, take a free voucher, a just in case voucher.
Yep.
And stick it in your, stick it to your, your wall over there. I think, what's funny is that pretty cool is that Boaz Weinstein tweeted that and quoted my friend Alon Rosen, who is a dear friend of mine.
I saw that.
Yeah, in the markets. I thought that was pretty badass. That would be pretty cool to get tweeted by Boaz Weinstein. He's a really, really well-respected credit portfolio manager in the world, What do you think of Bitcoin, man? I look at it as, it had the chance to do that 100K breakdown, and collapse. And it only made it to 92K. And we've been making higher lows ever since. And my bearish kind of angle has just worn off. The thing's 100K bid again. What are you going to do?
Dude, I got no opinion. I really don't.
That's fair. I love it. What is one of your give me like one of your stronger opinions? Let's work backwards that way. Like what do you feel like now? Like what is the conversation in your head? Like, yeah, this is good, this is working, this is a good trade for me. I'm in.
I mean, commodities are still basing. They're still basing.
Yep.
Oil is acting better. Gold is leading commodities higher. The ags are kind of turning up. Coffee has gone parabolic.
Yeah.
Like I think people think coffee is going to do another cocoa. Like coffee has just gone bananas. So I'm starting to see signs of life in commodities. Like nothing really to write home about, but just some positive price action. So I still have a lot of conviction on that. So
very good, very good. I'm more kind of I'm de-risking a little. I'm going to wind up taking this software trade off the pad, traded the breakout, booking the money. Bitcoin's hanging in there. The S&P is hanging in there. It's like, it's all systems go here, but we bring the stops up closer to the market so that we don't get left holding the bag. And when it gets there, we trade them. And if we decide we want to get back in, we can do that too. That's called managing the risk, right? Dollar last week, you had been calling for the dollar to top out, JD. It looks like it did peak and back off for sure. 106.60 in the dollar index with a 108 peak in the rear view mirror. Do you think that can still back off, or is it holding trend and going up?
Yeah, I still think the dollar is tracing out a top, and I think it's going to take a while. I look like really all of this. This is the one point I want to make on this podcast.
Yeah.
Everything is going to change on January 20th,
Hmm.
right? Shit is going to be coming fast and furious out of the White House. There could be comments about the dollar. There could be comments from about the deficit. There could, I mean, like, there's just it's gonna be tape bombs all over the place. You know what I mean?
Yeah.
So the way I look at it is, you got to trade the charts. You know, the charts tell you which way things are going. So stick to the charts, and should be fine. So
That's a good way of looking at it, man. You know, like that's kind of like having that mentality, for example, during the dot-com bubble. And while the NASDAQ was going up, there would be stocks that reported and missed and opened lower, like right on their ascending trend line. And like once you got the joke, you were like, oh my God, this is actually a buy every time.
this is another point I wanted to make. What I want to see is an intraday reversal in bonds or the dollar or stocks, right? Like, because we've been getting these moves intraday, like, and we close on the highs or we close on the lows, but I want to see an intraday reversal that shows the change in trend. You know, like, we
Totally.
haven't had that intraday reversal yet.
An intraday reversal that turns into like, a large magnitude follow through.
Yeah, like, I
So
want to
like
see the dollar open up and then close on the
splattered.
lows.
Yeah, splattered.
Yeah.
Yeah, that'll be well, we'd love to see it. Whether Mr. Market gives that to us, we'll see. But we got the S&P grinding away here, 60, 88 last. We've got on today's leaderboard, we've got gold miners, semiconductors up 2%, gold miners up 3%, internet stocks up 2%, triple Qs up 1.5%, oil's up 1% and change. How about airlines, JD? Tell me about this one. I'm glad we got to this because they have been breaking out like a fucking house on fire, almost back right to the highs today. The airline sector JETS ETF has gone from $16 in August to $26 in December. What in God's green earth is that all about?
Been to the airport lately? I mean,
Yeah,
it's
yeah, yeah, yeah. The airport's jammed. Jet fuel is cheap.
yep.
Yeah, I guess that they're just they're going to continue this trend, but this airline trend is up a rope. And what's interesting is that it's got the transport sector of the of the market, which nobody likes to talk about because it's not as exciting as technology, but it's got the transport sector of the market breaking out of a really long wedge pattern and going on a run. So that for me is one of the quiet underlying industrial bullish stories within the S&P's strength. And when you see cyclical stock, I mean, when you see tech stocks sell off, that's the stuff that you see the money going into. It goes flying into the industrial stuff like transports and industrial miners, gold miners, thing like that. So we'll see how the seesaw keeps going.
By the way, one stock that I've been kind of watching over the last year
Yeah,
is Sherwin-Williams.
yeah,
Have you seen Sherwin-Williams,
yeah,
SHW?
yeah. Gone.
Like,
Yeah, it's unbelievable, man. I mean,
it's paint. It's a
yeah,
paint company.
this is like follow through from, to me, lockdowns when people were shifting, moving out of their state. Nobody's working in the office anymore. Everyone's at home building a gym. I mean, people are building and doing construction everywhere you look. So, I mean, I guess that's what it is. You know what I mean? I don't know what stops it. I mean, we just allowed how many million people to come into the country that are all going to need homes at some point, right?
Yep.
So I guess maybe that's got something to do with it. And whether that trend continues or not under Trump, we'll see. But yeah, I'm excited for those tape bombs, man. It's going to be stuff like, Elon Musk just cut 600 billion out of the US budget. You know what I mean? Like Elon Musk just fired 48,000 government employees. Like, what's the tape going to do to that? But it's going to be wild. I think we cover the markets fairly well for a day that we want to turn this podcast around, launch it today because you and I launched our dual subscription finally today. It was exciting to work on that project, to get the website together, to get it launched, to get a good response so far, knock on wood. And I wanted to spend a little time talking about, what writing a newsletter is like, so I wanted to ask you, like, who and what was your inspiration to go off on your own and write the Daily Dirt Nap, and tell me, what burned inside you to want to write about markets.
Well, I mean, that's a great question. I was at Lehman in 2003 and I started getting Gartman. And I said to my boss, this guy Dave, who was an ex-Navy guy, I'm like, "What is this thing?" He's like, "Oh, it's a guy that writes a newsletter." I'm like, "So let me get this straight.
Yeah,
He's sitting at home and
in his
he's
drawer.
writing a newsletter and he sells it to Lehman Brothers for like 75,000 or something like that. He sells it to all the banks. He's making I don't know how much money. Like this has got to be the best business in the world." And I am a writer. I've always been a writer. And in 2004 at Lehman, I started writing my own newsletter on Bloomberg. And I started with 20 people. And by the end, I had thousands of people. And I said, I can turn this into a business. So Lehman goes bankrupt. And I go and get an office at 46 and 3rd. It's an SL Green building. And this office is like 60 square feet,
I
no
remember.
windows. I don't know if did you ever go to that office? Did you ever see
No,
it?
but I remember when you were there, what you looked like. I remember the whole thing. I'm going to tell a story when you're done.
Yeah. So I would sit in there and I was dipping at the time. So I had my skull and I would throw in like a big dip. But in the beginning, like I started this business and it's like November of 2008 and Citigroup is trading at like 99 cents and Bank of America is 2.99, and I'm like I can't believe I walked away from seven figures at Barclays to start this newsletter. And I would come in the morning and puke in the trash can. For like 3 months, I would come in and puke in the trash can and then get to work, you know? And
Yep.
then January 1st, I started the subscriptions and checks started coming in, you know? And I'm like, wow, like this is actually a business. I can make money off of this, you
Yeah.
know? And it just grew and grew and grew from there. I think, you know, I do a lot of different things. I write books or whatever, but I think the newsletter is my highest calling, right?
Hmm.
Like when I die, I want people to say that guy had the best damn newsletter in the world, you
Yeah.
know? And the Daily Dirt Nap has the highest renewal rate of any newsletter out there.
Yeah.
And any given year, it's 80 to 90% renewals, you know. It's unbelievable. So
You know,
I
you
love it.
yeah, you deserve to be commended for that. I'll tell a story right after Lehman went under was right when we met, because somebody had forwarded me your buy everything email
Yep.
on Bloomberg, which was like a world class thing that I had never experienced before. Like somebody like writing that from the hip and loosely about markets. And I was immediately like, oh, this is something. There's something going on here. So I got on your blast list. We stayed in touch. After you left Lehman, I was like, do you want to talk? Do you want to come in here at Dahlman Rose at the time and talk about, whatever working here or, being on an ETF desk that we were looking to start? And we had you in. You came in, you weighed about 110 pounds, soaking wet. You had a shaved head. You looked like Radar O'Reilly. And we were like, dude, you want to sit here and, sit in the trading ring with us and start an ETF desk? You were like, no, man, I'm going to start writing a newsletter. And I was like, wait, what? I thought you wanted to, like, what is going on here? So that was a funny story. And then we've been in touch ever since, but you were obviously the inspiration behind me doing this as well. I had a similar note that went from one subscriber, a sales trading client, an execution guy on the West Coast, to over 1,000 people organically, because that's how it went before anybody had formal newsletters.
Yep.
And so you were very encouraging in the idea that I could market mine and that the writing was good enough and the market takes were good enough. And so that's one story. But I have to say, just to throw this in, like the number one thing for me now, and I'm going to ask you the same, but the most nine volumes in, the most rewarding thing about it is the reach. right? And the reach is in a couple of different ways. It's like geographic reach, and it's also like emotional reach. Because like geographic reach, like my last 10 subscribers, JD, and I just pulled this out: Houston, Texas; New York; Hamburg, Germany; Clemens, North Carolina; Queensland, Australia; Ogden, Utah; Austin, Texas; Vancouver, British Columbia.
Yep.
And so it's stuff like that, and you're reaching people in all these corners in the world, and you're like, damn. And you try to develop a relationship with some of them, and some of them come right at you through the email. And I had somebody this year that was like, TG, I'm going through something kind of tough this year, and the quotes in your study break have really, really helped me, and I really appreciate that. And that's the kind of thing that you're like, oh man, I'm not really contributing much to GDP here, but there's something really fulfilling about reaching somebody in a way like that. And
I,
sometimes, yeah, good.
I had a guy write in this morning who's been a subscriber for 17 years. And he said, the number one thing that you taught me was invest, then investigate, right? If
Mm,
you want to buy a stock, buy it immediately. Take a starter position, right? Like buy it. And then once you have skin in the game, you will do the research, right?
mhm.
But if you don't buy it, if you wait to do the research before you buy it, it'll be 20% higher. And then you'll be like, oh, it's too late. I missed it. And then it's going to go up another 200%, and you're going to feel like a chump,
Yeah.
right? So invest, then investigate.
Oh, I love that. I love that. That's like the old floor adage. You want to know what it's like to trade orange juice? Buy 50, right? Right. It's like, and it's kind of what I tell people that call me at this level. Cause like I've kind of said that I've got people coming at me from all corners of my network that are like, what do you think of Bitcoin here? What do you think of Bitcoin here? And, I'm an old school guy, so I'm a little bit hesitant to say, be like, oh yeah, it's going to a million, like Eric Trump, that dickhead, said the other day. And I don't mind him, but who goes out and makes calls like that? But my point is, I say, get a starter position, get off the zero boundary. If you're going to
Yep.
buy it, buy some, and then you'll see how it moves. You'll get used to the volatility, and you'll have a skin in the game, like you said. So that's good advice. I've had a lot of people over the years say, man, when you have somebody reach out to you and say that you either made them or saved them money,
Oh, yeah.
right? Like that's like, I like take screenshots of those, and I have like a folder full of them. It's like, dude, keep doing what you're doing. Like this portfolio manager just commended you on a call, like you affected his portfolio,
Yeah.
like that's the stuff that's powerful to me.
I will say, what happens sometimes, and this is just bad luck. Like, I have a portfolio in the newsletter, and there's like 20 things in the portfolio, and it almost never happens where all of them are winners. You know what I mean? That
Yeah.
never happens. So you always have some losers. So inevitably, some ding dong, like just by pure luck, goes in the losers instead of the winners. And then he's like, "You suck." Like, and I'm like, "Look, like, I mean, there's, you I don't know, like what,
People got to understand this game better. I feel like, put it this way, we come from the old school environment where the trading desk was its own arena, right? And there was that level of, it was its own filter for performance and personality, and then when you get on Twitter, there's people that will literally like come from an anonymous account and call you out for being wrong or something like that, and you're like, I wasn't wrong. That's not the position that I had or whatever. Like people just come into this market without the experience of
well,
trading.
that actually brings up an interesting point, right?
Let's go.
Because you and I both trade. We
Yeah.
trade actual capital, but we also trade reputational capital, right? Which, look, I think it's harder to write a newsletter and recommend trades than it is to run your own money, because let me explain why. If you're just running your own money and you have a losing trade, nobody has to know about it, right? You can just close it out, lose money, move on to the next trade. Nobody knows about it. If I have a losing trade, 4,000 people know about it. It's public. If I put it on Twitter, 86,000 people know about it. You know
Yeah.
what I mean? And so one of the words that you've been using to talk about the macro dirt is accountability. right? And throughout my career as a newsletter writer, I've always tried to be accountable, which a lot of people aren't. If I have a call that doesn't work out, I say in the newsletter, my bad. It was the wrong call. Let's close this out and move on to the next trade and get on with it. A lot of people, they hope you forget about it, right? They just kind of move on to the next thing. They hope you forget about it. They kick dirt on it,
Yeah.
and that you and I are both accountable to our mistakes. You
Yeah.
know,
And it's because it comes from the experience of knowing that, the best traders know that they're only right 51 or 52% of the time. Like being wrong is as part of the business as putting your drawers on every morning.
yep,
Right. Like you're going to get in, I literally wake up in the morning and literally kind of, as I walk to my desk, I picture myself like Russell Crowe and Gladiator entering the arena at some level. And it's like, I'm likely to get my arm chopped off at some point today. I'm likely to get a shot to the chops at some point today, and I've got to figure out how to be better, and that's where the level of accountability comes from. And the other point that I kind of fumbled about before is that the writing I meant to get to is that for me, the writing helps the trading, right?
yeah,
I write to know what I think. And so that has birthed an accountable set of trades on the view matrix for people to follow. And it's the same kind of thing. It's like, look, when we're out, we're out. When the trade's over, it's over. We don't marry things. We don't ride things off into the sunset. We're here to be mercenaries and find the trades. And that's it. So I think that that's what the dual sub is going to be all about, JD. And we hope that people take us up on it. We spend some time creating this product, and we work hard together, you and I, both together and separately. And so I think that that's why it's such a potent combination. Is that our newsletters, while our friendship and our conversations and our trading conversations always overlap, our newsletters don't, and that's why I think that people call them such a good 1-2 punch, if that's fair to say.
yeah, and also, I mean, we have different skills, like which I've talked
Oh,
about
totally.
before.
Yeah.
I'm good at picking bottoms. Like that's my specialty. When people are puking, when people are panic selling shit, that's when I kind of vulture in and get long. And
Yep.
you are good at riding trends, right? Like I'll ride it up 30 or 40% and I'll bail, and that's the point at which TG comes in and he rides it another 100%.
Yeah.
Like
Yeah.
that's we have different skills.
Yeah, yeah, and people that have been reading us for a long time, there's a great testimonial on the Dual Sub website, or people that are like, I use them for two different things, and they are a great complement to my, views on my portfolio. So that's one thing that I'm confident about, is that you and I over time will make our way into the mosaic, into people's mosaic of market views. You know what I mean? We'll fit in with other people that they're looking at, because our track record is pretty damn good. So let's
It's
keep
above average.
it's above average, I would say. It's above average, and the accountability is off the charts. So I think that that's where the strength comes from. Is there anything else off the markets, JD, we want to talk about today before signing off?
We should talk about Soto.
Oh my God. What are your thoughts?
Nobody was going to outbid Stevie Cohen. Nobody was going to outbid Stevie Cohen.
No,
No.
no, that was it, and the best thing, he had such a gangster line that, they asked him in the press, are you excited that you, outdid some of the other bidders? And Stevie Cohen leans forward. He's like, what? Were there other bidders? Who are they? Right. Like a total, like, ma'am, it's my trading desk here. Right. I bid for it. I'm the only bidder. I got him. You know what I mean? But 3/4 of a bill dog, we're going to pay Juan over 15 years.
You know what I read somewhere is that Juan Soto wanted a suite at Citi Field for his family, and Stevie Cohen gave him a suite. But Hal Steinbrenner would not do that because he didn't do it for Aaron Judge, he didn't do it for Jeter, he didn't do it for Garrett Cole, and he's like, we're not doing it for Juan Soto. And I think there's some intangibles there. In addition to the money, like Juan Soto was always going to go to the highest bidder, but I
Yeah.
do think there's some intangibles there.
Yeah, it's interesting. Well, Yankee fans are up in arms, for the most part. And I kind of do, and I don't understand that. Like you said, it's like, there's a lot you can do with 3/4 of a bill dog in Major League Baseball, for fuck's sake. And, I mean, just paying the Mets, paying somebody for that long, that much money he's going to fill the seats for the next 10, and then the last 5 or God knows what,
Yeah.
So, but we'll see how it goes. I'm not going to second guess Stevie Cohen, not as a baseball manager or as a trader, that's for sure. What else, JD?
I think that's it.
I think that covers it, everybody. Go buy the Macro Dirt dual subscription and stay ahead of the tape. Hasta la vagina, good people.
Hasta la vagina.